US equities rallied hard overnight with semiconductor surging 272 base points, but futures reversed negative into Asia's open. Are institutions taking profit or rotating risk? When semiconductors surge 272 base points to lead growth, but broad tech lags 29 base points negative. Is semiconductor conviction real or just overnight momentum trap? When Japan and Korea bounce, but Hong Kong crashes 122 base points and Australia breaks 118 base points, is this regional rotation or Asia reversal unwinding? When fear collapses 297 base points, but yields barely move 5 to 18 base points, is this complacency setting or genuine stability returning to markets? When crude breaks lower into Asia's mixed open, while gold sells and copper barely holds, does commodity weakness signal demand destruction returning? Asia is minutes away, 5 signals, everything you need before the first bell. This is the Asia first look, let's get into it. S&P 500 closed up 105 base points. Nasdaq closed up 164 base points. Dow Jones closed up 69 base points. US institutions rallied hard overnight. Semiconductor surged 272 base points. Led the move. That's strong conviction, but here is a signal that changes everything. S&P 500 futures repriced to minus 15 base points at Asia Open. Nasdaq futures repriced to plus 1 base points, nearly flat. Dow Jones futures repriced to minus 37 base points. Futures reversed negative into Asia's positive open. That tells you US institutions are taking profits on the semiconductor surge. Overnight strength did not carry into the morning session. Then Asia delivered mixed signals. Nikkei futures up 40 base points. Tokyo bounced light. Korean futures implied up 46 base points. Seoul held conviction but light. Shanghai Composite futures implied up 52 base points. China bounced but Hang Seng futures implied down 122 base points. Hong Kong crashed. Australia futures implied down 118 base points. Australia broke hard. That's the first signal. Asia splits developed versus Hong Kong. Developed Asia bounces. Hong Kong collapses. Which signal is real? That's the what sector leads confirms. Semiconductor index up 272 base points overnight. Semiconductors surged hard. That's a growth leadership. But technology ETF down 29 base points. Broad tech is selling into the semiconductor strength. That's the divergence. Semiconductors bouncing, tech selling. When growth sectors diverge like this, institutions are rotating within growth. They are buying semiconductors and selling broad tech. That tells you semiconductor conviction is selective, not a broad based. Financial ETF up 2 base points. Financials barely bouncing. Material ETF flat zero. Materials have no conviction. Energy ETF up only 5 base points. That's the problem. Crude collapsed 46 base points, but energy equities barely holding. Energy sellers are ahead of crude market again. They don't believe the commodity story. Industrial select down 20 base points. Industrial selling. Healthcare ETF down 25 base points. Healthcare is breaking. Real estate down 18 base points. Real estate breaking. Utilities flat, barely holding. That sector picture shows growth winners are semiconductor specific. but cyclicals and properly all are losing conviction. Asia opens into a market where only semiconductors have conviction. Everything else is selling. Asia's regional picture shows clear split between developed Asia and Hong Kong. Nikkei futures implied up 40 base points. Japan bounced light. Tokyo's conviction is weak. Korean futures implied up 46 base points. Seoul bounced with Japan but also light conviction. Taiwan futures implied up 73 base points on semiconductor recovery. Taiwan holding conviction on semiconductors. Hang Seng futures implied down 122 base points. Hong Kong crashed hard. That tells you Hong Kong institutions are selling aggressively. Hang Seng Tech futures implied down 193 base points. Hong Kong Tech is the seller. Hang Seng Financial futures implied down 67 base points. Hong Kong Financials also selling. Shanghai Composite futures implied up 52 base points. China bounced with developed Asia. Shanghai's bounce tells you Chinese institutions are buying the dip while Hong Kong institutions are selling. Singapore index down 24 base points. Southeast Asia light and selling. Australia down 118 base points. Diverging hard negative. That divergence is the regional clue. Australian dollar up 13 base points tells you Australian capital is not fleeing, but Australian index is selling equities while currency holds. That's a portfolio rebalancing into weakness. Chinese currency up 9 base points confirms yuan weakness. China is not aggressively defending. Volatility index is down 297 base points to 18.92. Fear is collapsing hard. That's a major signal shift. But 10-year treasury yield up 5 base points to 4.29. 5-year treasury yield up 18 base points to 3.91. 30-year treasury yield up 8 base points to 4.90. 13-week treasury down 8 base points to 3.59. When volatility index collapses but yields barely move, institutions are not selling bonds. They are comfortable with the yields at current levels. That tells you institutions see the Asia's bounce as a sustainable, not a trap. Growth repricing already happened. Fear easing confirms comfort level. US dollar index up 21 base points. Japanese currency up 4 base points. Safe haven currencies holding but barely. European currency down 26 base points. German currency up 3 base points. Euro weakness persists. Crude oil down 46 base points. That's a break. Oil is selling despite of volatility index collapsing. Gold down 11 base points. Selling with crude. Copper up 10 base points. Barely holding. When crude sells into volatility index collapses, commodity markets don't believe the recovery. That divergence is the key risk underneath the volatility easing. Nikkei futures implied up 40 base points. In Japanese weak bounce conviction. Tokyo bounced light. If Tokyo opens and extends this bounce, conviction is there. If Tokyo reverses lower, the bounce was algorithmic relief. Japan's second execution is the first test. Watch Tokyo's opening volume. If heavy, institutions are stepping in. If light, overnight moves were positioning only. Korean futures implied up 46 base points. Is Korea's light conviction? Seoul is not aggressively committing. If Seoul holds, Both developer markets confirm bounce is real. If Seoul rolls, conviction breaks early. Korea is a second pivot. Hang Seng futures implied down 122 base points. Hong Kong crashed hard. This is the breakdown test. If Hong Kong opens and extends lower, Hong Kong breakdown is spreading is other regions. If Hong Kong stabilizes at open, damage is contained. Hong Kong's execution determines if breakdown becomes contagion. Shanghai Composite futures implied up 52 base points. China bounced solid. Watch Shanghai's opening execution. If Shanghai extends, China's conviction validates developed Asia. If Shanghai rolls, China's conviction wavered. Crude oil down 46 base points. Must stabilize for Asia's bounce to hold. Watch crude momentum. If crude extends lower, Asia's bounce fails. That's a watch signals execution pivot. The signals are set. Asia has not opened yet. The first move always tells you more than everything you just heard. Japan opens first, that's your signal. Shanghai's first minutes, that's your confirmation. Watch which one the markets humbles from your own view. Watch the Japan, then come back and drop it in the comments. Did it deliver or did it surprise you? Join the community where market minds speak. I am Jay. See you in market.